college students drop out of school to like go build in and around Gen AI. And there are just a set of first principles of like, what's the problem you're really trying to solve here? Who's the customer? Why are you uniquely well positioned to do that? And if you don't have great answers to those things, you're going to run into walls.
What makes like people who pitch AI infrastructure companies stand out? Someone who can really clearly articulate a vision and strategy and like see a chessboard, who the players are, how the market's going to evolve, and have a strong opinion on what's going to unfold and why the things that they're building are going to take advantage of how those things are going to unfold.
We're investors at Primary, an early stage VC firm in New York. We have $1 billion under management. We've been building out this infrastructure practice over the past few years and have found this newsletter to be a really helpful tool for us to keep learning, share our learnings, build a community with other people who are thinking deeply about this type of investing. But we decided we wanted to share the ideas in that newsletter in a different format with hopefully a different audience, and that's mainly founders. Specifically technical founders who are looking to build businesses for technical buyers. And so we're going to share sort of our reflections on the market, but then also cater those reflections to thoughts that we have that will hopefully be helpful for founders looking to raise their first round of capital, build out their team, prepare for their Series A, general focus on early stage, but also thinking broadly about what's happening in the market at the very top. So we'll spend a bunch of time thinking about companies like Databricks, which we spent a bunch of time thinking about this month.
For sure. And then just, I think one more note on sort of the impetus for this is that, at a high level, as a founder, understanding like why an investor thinks certain things are interesting versus not interesting is very opaque and seemingly kind of like irrational and idiosyncratic. So I think a lot of the motivation for this is getting inside the head of an investor, but in a way that's helpful for a founder in thinking about how to position their business, talk about their business, and talk to investors about their business. So yeah, we wrote about and have been thinking a lot about Databricks this month. And really not just this month, but we've been thinking about Databricks and its acquisition specifically of MosaicML for months since that acquisition happened. And its importance in sort of the overall MLOps landscape and stack. It was a pretty staggering acquisition for a number of reasons, probably the most obvious one being that it was $1.3 billion acquisition on just like $30 million of ARR.
For a company that was alive for
2 years.
2 years.
Yeah, and had really just started to significantly monetize like less than a year earlier. I think for the first almost like year and a half of that business, it was focused just on like researchers and academics for the most part, and only started going truly commercial about 6 or 8 months before it was acquired.
And maybe just to jump in, I think like the basic work that they were doing in the early days was trying to really reverse engineer what OpenAI and Facebook have been doing with building these really powerful foundation models so that they could help others do the same without spending hundreds of millions of dollars to do it. So like a core premise that I got early on talking with Jonathan, the chief scientist there, was that there's all this like wreckage in training a foundation model of basically failed experiments that is compute and human resources is not valuable once you've got the lesson.
Yep.
And so if they could figure out what those lessons are and then bring those to other companies, they would be democratizing generative AI.
Yeah, and the power of that, people have been talking about ChatGPT and GPT-3.5 and GPT-4 OpenAI's models. Some people may know about some of these other API services like Anthropic or Cohere. But what a lot of bigger companies are excited about, and increasingly like even mid-market companies are excited about, is taking open source models and fine-tuning them with their own internal data, which you can't do as easily with an API service-based model or a closed source model. Doing this with an open source model enables a degree of flexibility and control that's really valued by larger companies, and Mosaic was and maybe still is the leading solution for fine-tuning an open source model and really like taking control of a model and running it on your own infrastructure. And so the Databricks acquisition makes a ton of sense from the perspective of them trying to kind of close this loop of offering an end-to-end LLM ops solution like that. stage of being able to train and refine your own model was really missing from what they were offering. And so Mosaic made a ton of strategic sense for them.
Yeah, I mean, high level, Databricks, their mission is enable the enterprise to leverage the value of their data. And they've been at that for over a dozen plus years, and had taken like probably the most dominant position among non-publicly traded companies supporting the enterprise in this. They were north of $1 billion before the LLM explosion. And it's pretty staggering their ability to keep adapting given their size.
Yeah.
Like in this month's newsletter, we sort of call out their website at the end of
2022.
Compared to today, it's like it's two different companies.
Yeah.
One is all about your data lake or your lake house, and the other is about your AI.
Yeah.
And that's obviously just a shift with the market. And while it may seem obvious, I think it's actually very important from a founder standpoint in that it's very easy to get super committed to what you're doing and miss massive market changes. And adapt slowly to changing your positioning. And so that's something we've been looking at, with founders both that we work with and founders that are pitching us to see like how fast is their speed of iteration around how they present who they are to the world. So there's a bunch of observations that we've got here about like what does this acquisition mean, and what does it mean for startups as well?
Yeah, and there's also this like even more macro thing of like, Mosaic went 0 to 30 in 6 months. It's like, as a startup founder who's either in the early days of monetizing or maybe like pre-revenue, that kind of jump, I think, can seem like literally impossible. Like how does that happen? And that's something
no one puts that on their slide deck. Year 1, 0 to 30.
Right.
Which makes sense because you'll look crazy.
Yeah.
But at the same time, you do want to be able to understand why your business is so exciting that it has the possibility to accelerate like that.
Yeah.
So that's a huge thing that we're always sort of encouraging founders to explore, is like how to think about their market so strategically that that they are identifying a tailwind that's really powerful that they could come to ride to lead to exceptional growth. And there are multiple companies right now within the AI landscape that have this kind of staggering growth. Like Weights and Biases, I think, is a great example of, we heard recently that them going from like 2 to 40 in an 18-month period, ballpark like that. Together right now, I think got to north of 20 in under a year. It is possible, but you have to be in the right market. You have to have the right positioning. And if you don't feel like that's you, that might be right. You might need to be building for a long time. Like, to Tobias' point earlier, like Mosaic spent 18 months-ish in this research phase. So it's just, you need to know where you are, but you do want to be eyeing that kind of acceleration with your revenue at some point and be thinking like, what am I going to do to position our tech, our brand, who's our ICP, and why are they going to be so looking to buy so quickly? Because all those stories are not because it's just that someone built something great. It's that someone got the timing right.
It's like, what are the conditions that make that possible for your business? So what's more important than saying like, oh, in 12 months or in 18 months, we're going to be at $1 million in ARR or $2 million in ARR, and that's because our ACVs are X and we have this number of customers and like this is our funnel. Like, what's more important than that is demonstrating a like firm grasp of what it would mean for you to accelerate far beyond that. From like what are the tailwinds perspective, what's happening in the market perspective, what's happening with customers and competitors in your business, and why is it positioned to like really take advantage of something that's bigger than just sort of some steady ramp that's like essentially an equation you put on a slide. And so that's, I think, sometimes lost in like decks, is like this narrative around how does real, genuine acceleration happen? And finding like the right investor in many ways is just like finding the person who believes that there's actually like a chance of that story coming to fruition.
Yeah, it's so Mosaic going 0 to 30.
Yeah.
So the conditions there, you couldn't ask for a better sort of confluence of factors, in that everyone in the enterprise had to buy. AI solutions.
Yeah.
They
And even non-enterprise.
and not enterprise, and that's actually an important point too,
Yeah.
in terms of like who was Mosaic going after when they started, and who are they going after now in the context of the Databricks acquisition. So let's spend a minute on that, and then come back to this idea of like what are the conditions, because there's a few conditions that the Mosaic acquisition or that the Databricks acquisition of Mosaic creates as well for startups.
So one interesting thing that we write about this month is that even though from a product perspective, the Databricks acquisition of MosaicML makes a ton of sense, and there's like a real symbiosis in the offerings, like ICP and the customers of those organizations are actually kind of different. Databricks for a long time has been a very enterprise-focused company, selling to large corporations with really big engineering teams, maybe not the most like tech forward businesses, but big companies with big teams and lots of budget. Mosaic, I think, made really like most of their revenue and most of their growth came from emergent, fast-growing tech companies that wanted to embed AI into their product offering. And so like Replit is a really good example that gets talked about as like a big MosaicML customer and like a big success story for that business. So I don't know like what the actual Venn diagram would look like if you like took Databricks customers and took Mosaic customers and put them on top of each other. But my hunch is that the overlap would not be that big, which is like an interesting thing in terms of the acquisition, because now Mosaic is in all likelihood going to be pushed up market, going to be embedded into the Databricks product. And so this question remains of like what happens to like the old target customer for Mosaic, and the implications of that. And so like that's something we go into in the newsletter.
And today, there's definitely a bunch of businesses that are in one way or another trying to bring AI capabilities to the enterprise mid-market startups. And that is like the number of pitches that we are now seeing that in one way or another is saying, I'm going to be the one to enable this company to leverage the power of AI. It's very, very crowded. And so one important thing to think about is, how do you stand out? So what are your thoughts about like when something is starting to stand out, what it looks like?
Just for like AI infrastructure.
Yeah,
generally?
I mean, it's like the number of times we're at a pitch, it's like, oh, wait a second, this is sounding a lot like the pitch we heard earlier today and yesterday and last week. And sometimes it's the founders actually not really doing the exact same thing, but there are these moments of these general statements. And with seed and pre-seed, it's very like people don't quite know what their business is really going to become.
Yeah, I mean, it's hard, right? Because like on the one hand, as a founder, you need to like speak a language that VCs are going to understand. And you need to like frame what you're doing in a way that's approachable and easily understandable. The problem is that what that ends up leading to is you explaining your business the same way like a bunch of other founders are explaining it. And you need to like walk this delicate balance of like being very clear, very sort of like direct and genuine about what it is you're building, but not lose sort of a relatively untechnical, unsophisticated investor in like the details of like what makes it different. So like figuring out how to like communicate a product vision and a business in a differentiated but simple way is really hard. And especially with this AI infrastructure stuff, because like everyone's doing things that seem kind of similar and that like, you know, in 5 years, what you're doing now could bleed into like what some other company is doing. And like the lines are really blurry and the stack is still kind of like evolving and being formed because we're still really early in all of this. So that challenge is just accentuated more given the dynamics of the market.
Yeah, and a piece of me almost wants to say, like, if you're doing that, do something else.
Right.
Because it's just gotten so crowded. And the truth is that there's already these, we've started talking about like AI gorillas that are going to control so much of the AI market. There's already these businesses that are off to the races that were started working on in 2020, 2021, 2019, 2018 that have like, we're in a good position to capture this wave, or businesses that got going in 2022 or 2023 that are really off to the races. And there's already a lot of sort of crud that is emerging where businesses are derivative of what emerging leaders look like.
Yeah.
Like we mentioned together, we mentioned weights and biases. It's like that's already a hard wave to be going after without a really compelling reason to win. And there are still so many opportunities that are unlocked because of what's happening with generative AI. We were talking yesterday about this thing that Chamath put out there around like we're going to go rebuild a bunch of SaaS applications using generative AI and then undercut the market, which like I get that thesis. We're interested more in what can be done at the infrastructure layer and began thinking about like who are going to be the people to really rebuild existing sort of table stakes solutions, Zapier, Datadog.
And it might be those businesses.
Definitely.
It's like there's just this thing, we're in this weird moment where there's like this really powerful new technology that the way it can be harnessed is still kind of unclear. Enterprises face a risk, but it's also a massive opportunity, right? Like those things always kind of come together. And a lot of like who emerges from the pack, who's the Gen AI version of Datadog, whether the answer to that question is or is not Datadog is just like dependent on like that business's strategic vision and execution. And so it'll be really interesting over the next like 5 years to see who embraces Gen AI. On the flip side, some startups might take advantage of companies that don't.
Yeah, and one thing that this is making me think about is just the gold rush nature of what's going on. College students drop out of school to like go build in and around Gen AI than I had seen in a decade of both investing and as a founder. And there are just a set of first principles of like, what's the problem you're really trying to solve here? Who's the customer? Why are you uniquely well positioned to do that? And if you don't have great answers to those things, and I think this goes back to the storytelling comments you were making, or the like, how do you educate the investor? You have to have a reason to be winning the market that you're in, or else it doesn't matter how good the story gets or how hard you try, you're going to run into walls. And that's not always the easiest thing to realize, especially with hard-headed founders.
And it's college students, but it's also these like researchers who have been spending literally decades working on this technology, and now is their opportunity to really like take a massive swing based on the research they're doing and actually make a lot of money off of it. So it's like talent is kind of coming from like all places. You asked me earlier, like what stands out, what makes like people who pitch AI infrastructure companies stand out. And I think the thing that is most powerful when you see it, and we've talked about this a lot, is like someone who can really clearly articulate a vision and strategy and like see a chessboard, who the players are, how the market's going to evolve, and have a strong opinion on what's going to unfold and why the things that they're building are going to take advantage of how those things are going to unfold. It's like real like strategy stuff, you know? Whether or not you're like right or wrong about that, the ability to like communicate that effectively and clearly ends up standing out a ton, because most founders don't think that way, or at least like don't communicate that way to VCs.
Yeah, it's funny as you say that. It makes me think of, I mean, as we're talking, we're saying like what we're looking for in founders, but it's also helping me think about like founders that we both have been the most impressed by. It's a cliche framing, but like this idea of a learning machine. So it's sort of like, well, what are the indicators of a learning machine at a point in time?
Right.
And, people talk about like, you want to invest in lines, not dots, or like curves or whatever. But the reality is oftentimes you don't have that luxury. And I think that to your point of like the chessboard analogy, part of what that can illustrate is that someone is engaged in a process of deep thinking about their business, and you can tell that it's going to just keep on changing. That's less advice for founders and more reflection for us, because if that's not you as a founder, it's very hard to fake that, I think. But if it is you as a founder and you're trying to figure out the pitching thing, I think that part of the another layer of that is within your control is about authenticity and about like being willing to share your inner dialogue some and be less perfectly polished about like, this is exactly how it is, and more, let me bring you into my thinking. Let me tell you, like, I had this insight, and then I had this insight, and then I had this insight, and that's like where I am right now. And I have these deeply held beliefs, and this is our strategy about how we're pursuing this opportunity. And we're going to keep on learning to assemble like the perfect game plan to capture the market. Now we need money, we need talent to go do these things. And it becomes clear, like, okay, they're going to keep learning and adapting in market to arrive at their sort of like, you don't know the whole chess game at the beginning. You have to keep adapting. Mosaic started going after startups. Today, they have been acquired by Databricks, which really has a very strong enterprise sales motion, or a systems integrator sales motion. And so through this acquisition, there is fresh space to go after what we were talking about, is like the 99% of companies that do want to leverage the power of generative AI, are not going to spend the kind of money they're spending on a Databricks. They need more flexibility. They need more speed than what a Databricks will enable. And that represents an opportunity, and probably many opportunities.
Like, this acquisition in isolation is interesting, but it speaks to something bigger around like consolidation around kind of the enterprise best in class kind of like LLM stack that's sort of emerging. And there are different companies that are like going to battle for different approaches. Databricks and Snowflake, I think, being the main two, which is probably something we should talk about in another one of these. As enterprise consolidates, the long tail becomes more open because of the nature of like who these enterprise solutions are acquiring. They're not acquiring companies that are already selling into enterprise. Yeah. They're acquiring companies that are selling more into startups. Yeah,
we've been also writing a good bit about the innovator's dilemma, and now I've been thinking of this, like, who are the AI gorillas? So it's all the hyperscalers.
Yep.
It's Databricks. It's Snowflake. It's obviously OpenAI.
I would put Meta in there too.
Meta for sure.
And NVIDIA.
And NVIDIA for sure. We need to define what makes one an AI gorilla and how, like, what ascent towards that looks like. A point is around, like, especially with the hyperscalers and Databricks and Snowflake, is that they are all competing for very big ACVs with large customers. But Gen AI is a technology that can be brought to market for not that much money.
Yeah.
The one dynamic of innovator's dilemma is that the really big companies can't cannibalize their current revenue streams. There's a lower price point offering for a broader segment of the market that can leverage new technologies to bring a capability that everybody wants, that the big guys are not going to sort of lose their current revenue streams to go after. And so that's part of this, like, AI for the 99%.
Yeah.
And for founders building, it's like you can't go and compete with the AI gorillas out of the gate. You'll get squashed in that jungle. So you have to, like, find a segment that you can go win credibly that they're not trying to win right now.
Yeah. It's sort of ironic because I would credit Mosaic as being really like the company that was like trailblazing in this idea of we can democratize AI. That was like a lot of their messaging in the early days. They were able to like train, models for like way less money than everyone thought was believed possible. They sold to a lot of like mid-market and scale-up type companies. They had language, I think, in their marketing materials around democratization of AI. And then they were acquired by Databricks. And so they kind of like, I think, normalized this idea of like Gen AI as a democratized technology. But now they're not going to be the ones probably doing that democratization. And so who will is a big question. There's a lot of companies vying for that throne in different ways. Together is a really interesting one. There are like smaller, more upstart ones like Base 10 and Modal and some of these like inference as a service businesses. But I think it's like a big surface area of opportunity.
Great. Yeah.
Why does that matter to founders? That like little thing of analysis of like Mosaic's acquisition is interesting for these sort of competitive kind of analytical reasons. Like, why does that end up mattering for like a founder who's building like a seed stage business?
Yeah. You shouldn't be changing your strategy based off of that acquisition. Your strategy should be emerging from your pulse on a problem that you're obsessed with. But I think there's a lot of ingredients in here. I think it could say like, don't go in this direction if you're trying to go sell LLM capabilities to the enterprise because it's way too crowded. You need to have something that's uniquely different. I think that a couple things about the Mosaic acquisition that are really interesting that we haven't quite fully named is about their go-to-market. And if I was a founder building in and around this space, I would be wondering, like, how in the fucking world did they get from 0 to 30? What can I do to try to replicate that type of growth? And so, one thing was, obviously incredibly impressive technology that was deeply needed. That's the result of like your unique perspective on the world, your customer discovery, et cetera. But they also won a lot of credibility in market by some of the talent they had on their team.
Yeah.
The bar that a founder has for the type of talent they want to have around the table is an incredibly important indicator of their likelihood of success. And it should be, I want the best in the world. And I'm going to be able to have a strong enough vision for the potential of this company that I can go convince the best in the world to come and get 1% or 2% or 0.5% of my business, take a massive salary cut, and have a chance to change an industry with me. And like that is like, it needs to feel like I'm bringing people into this movement that I'm going to build that genuinely can change an industry that potential employee or founding team member is going to care about. You're going to have to spend time with that person and really understand what makes them tick and figure out whether or not you have a shot, and then be able to sell in terms of the vision, in terms of the equity, and the other people that they're going to work around. Because it wasn't just one hero that Mosaic brought. It was like a whole team of people. Say like, we're the best.
And we've spoken to a bunch of people who both like are Mosaic customers and who evaluated Mosaic but didn't end up being customers. And one striking thing that I've heard from a couple of folks in the latter category now, so people who evaluated Mosaic but aren't customers, was that they said something along the lines of like, yeah, it wasn't right for us for X, Y, and Z reason, but like, man, those guys are amazing. Like those guys, like, wow, those are like the smartest guys on the stuff that you'll talk to. And we were really impressed, even though we didn't end up customers. And it's like, if that's the impression you're leaving on people who don't end up buying your solution, it speaks to the quality of that team.
Yeah. So searching for like your hero hires that are going to change your market position with your customers, with VCs, and of course, like the output. It's like, it starts there of like, what are they going to actually do for this company? But your bar should be so high that it's like, they're going to change the DNA of this company by what they can contribute.
I thought that you were going to go, when you started talking about Mosaic's go-to-market, to this point that their go-to-market team was like really tiny.
Yes.
Which is also just like crazy that like you could, I mean, I don't remember how big their go-to-market team actually was, but like small.
I think it was founder-led sales with one very senior go-to-market leader, Barry. And I don't know what support capabilities they had, but there was a moment in time where, I mean, it must have just been like shooting fish in the barrel to go from 0 to 30 in the amount of time that they did.
It's an important point because it speaks to this, like in the early days, quality, not quantity, right? Mm-hmm. That 2 incredible people or 3 incredible people riding the right wave and selling the right product can do way more than more bodies,
My first time ever pitching a VC, 2009, I remember I had like put together the whole deck with my co-founder, and we sort of were walking through and got to the end, and we had the perfunctory revenue slide towards the end of just how big we were going to get. We thought it was like sort of audacious. And he just looked at it and he just said, these numbers aren't big enough. You need to understand. And he was being very friendly. He was trying to, just a thing that I would encourage all first-time founders especially to do, is find some friendlies who are going to who really know what they're talking about, who are going to share advice. But he just said, us VCs, we have stars in our eyes. And if you're not showing us something that makes us envision our ability to escape into the not just this atmosphere but into outer space because of the scale of your business, then we don't get interested. It doesn't mean like, okay, let me have a bigger revenue slide here, because I think that you can make it so big that it also you lose credibility. And all of these things are a test of like how effectively can you communicate. So I'm not saying so much exactly what that slide should look like, but that did sort of like plant the seed that again and again in my journey in startups and seeing incredible successes, they come with founders who are able to envision something so unbelievably large happening with their business really fast and hitting a kind of like a hyperscaling inflection point. That you don't always see in the beginning. And again, the scale of vision changes over time too, depending on the market that you're in. Uber's first seed deck said that they would maybe get to 100 million in revenue.
So they had like a $500 million TAM or something like that, or like some really small TAM.
There's no one way to do this, and it depends on the business that you're building. Everything is context specific. But chutzpah, the ability to like really name a big, bold vision is key. And if you're daunted by the type of growth that, say, MosaicML is able to get to, then you need to dig a little deeper and get a little bit more ambitious.
One question is, how did Mosaic grow so quickly to such an amazing number? One of the reasons was an incredible go-to-market position and execution. Can you talk a little bit more about that? Because they had a really small team, but did so much.
So right moment, right time.
Yeah.
The Naveen, the CEO of Mosaic, had real experience around the challenges that the enterprise had adopting AI on big models, and they were already working before the Gen AI explosion. They just walked into like perfect timing of having a solution that was ready to come to market at precisely the moment that everyone wanted to buy. That's a perfect storm. You can't quite engineer that, but you can ensure that the talent that you have on your team, both on product, on research, on go-to-market, is all truly A+. There is like a North Star that you start to learn that a founder is just like naturally inclined towards, of what they're really trying to build. And the more that a founder can connect to what that North Star is and the operating principles that they're going to embody to be able to realize it, the better.
AI infra is particularly hard because you just have so many really smart people who see this opportunity and see it as like, this is like the moment they've been waiting for. I mean, this is the dream of researchers and academics who have been hard at work on AI and ML stuff for the last 20 years. It's the dream of 20 and 21-year-old math majors at an Ivy League school who think that this technology is going to change the world. And so as a founder, like the number of opportunities is tiny compared to the number of people trying to go after those opportunities. So there's going to be redundancy.
So we talked about this thing of the learning mindset or learning machine as an indicator of something you're looking for. What's like the work to do that learning?
The learning machine is something we talk about a lot. Another way to put it is like an insights machine, where like there are just some people who like every time you talk to them, they have some new insight. It's like they learned something new that they're really excited about that they don't think that many other people know. And they learned that by primary research, by like connecting dots that other people might not have connected. They like dig further and further into that thing.
What is primary research for a founder? It's customers.
Yeah.
It's other founders building in and around the world that you're building in. It's a network of investors that are also watching that market. It's employees at your competition. I think those might be the big four: customers, employees at your competition, VCs, and a network of founders. And usually a founder's like kind of good at one or two of those. Sometimes though, they're not good at any of those. And it's like, you can kind of tell that they're sort of getting stuck in an internal world and they're not even spending that much time with customers.
Yeah.
It's like they're getting busy with everything and getting lost by not arriving at something. And then sometimes it's like wow, you're just constantly getting new insights. That is like the learning machine is then driving you to get those insights.
Yeah.
It's a hard thing to cultivate. I don't know what the conditions are that sort of give rise to, other than someone's like innate curiosity.
It's a curiosity
and
thing.
and drive and confidence.
And you're more likely to have this quality if you're building something that is like your life's work passion.
Yeah, the confidence I think is actually a big piece of it.
Yeah.
I have seen founders get on the defense because nothing is working.
Yeah.
And those insights start to slow and almost come to a screeching halt, because it's like you're just pushing the boulder up the hill, which is not a place of confidence. So that is, anytime you feel like you're just pushing the boulder up the hill, it's not going in a good direction. It's tricky to know, because there's a value in the grind, but the grind should feel like I'm getting somewhere right now. I'm getting smarter and smarter. I'm getting better and better traction, a fresh understanding of where I should be going. That actually feels very important.